Happy Sunday, everyone. I'm excited to hijack an interview that my good friend Tarang Patel, who's a radiologist here in Arizona, is conducting. He is interviewing not Dr. Shivani Dubai, who's the Deputy Director of Small Business Association in the Phoenix area. The CARES Act was passed just a few days ago, rolling out fast and furious, but there's a lot of confusion, a lot of misunderstanding. The banks and lending institutions were given very little time to roll this out and implement it to the public. We're talking about, of course, the government assistance in light of the COVID-19 public health emergency. So this is rolling out right now, and a lot of people are confused, myself included. We started the application process already. We started gathering all the information, but from my understanding, certain banks were overwhelmed with the applications, which started on Friday. Dr. Tarang Patel is the host of Doctors Money Matters podcast and website. I interviewed him a little while ago, and he is about to go live on Zoom with Shivani Dubai, the Deputy Director of Small Business Association here in Phoenix, Arizona. Hopefully she will be able to bring us some clarity regarding what is going on and how to apply for the Paycheck Protection Program, as well as the emergency injury something, EIDL, something loan. So they are on Zoom right now. As soon as they start, I will switch over to them. If you guys have any questions, feel free to leave it in the comments, and I'll try to ask during this live stream. But I'm sure there will be a lot of questions that people will be asking. So stay tuned. Somebody a few days ago at the Corona Task Force briefing by the White House, one of the reporters asked, "Well, how can you show appreciation to healthcare workers who are on the front lines taking care of coronavirus COVID-19 patients?" Well, I think the best thing that you can do is to follow the CDC guidelines, which is to wash your hands thoroughly and completely. And the other thing is make sure you don't touch your face, because the virus is a lot easier transmitted through mucosal surfaces, meaning eyes, nose, and your mouth. So don't touch your face. One of the things that the latest CDC recommendation came out was the use of face coverings, not masks, but face coverings. One of the best things is that it'll remind you not to touch your face. So that is I like that recommendation. Now, the thing is, it's recommended that you wear a face covering if you're out in public and physical distancing is not possible. Meaning, if you're at the checkout counter at the grocery store, you can't be too far away from the checker. So in that instance, you probably want to wear a mask to minimize your risk of exposure. Or if you are an asymptomatic carrier, it will hopefully decrease the amount of viral shedding from you. So let's switch on over here real quick. I think he is about to start. So hand washing, don't touch your face, and physical distancing. All right. Looks like they're about to start. I'm gonna switch on over to Dr. Patel and Shivani Dubai.
Hey everyone, good morning. Welcome to this first live stream that we're doing with Shivani Dubai from the Small Business Administration. Hearing some background voices. So if you're not actually talking, can you just mute your phone or speakers so we don't have too much feedback?
Really? Awesome.
So we're going to be talking about the Small Business Administration programs, and Shivani is a deputy director here in the Phoenix area for the SBA. And I know there's a lot of information that's come out recently. A lot of you are interested in the programs to help, provide funding and loans for your practices that have been adversely impacted during the coronavirus crisis. So she's got some really good information. We're going to go over the basics, and then she's going to do a Q&A session with many of you that are on here, as well as those of you who have sent me some questions. So good morning, Shivani. Thanks for agreeing to do this. I know a lot of people are excited.
Yes, thank you so much for having me, Dr. Patel and Dr. Lin. Thank you guys for hosting this session today. We're really excited to do this for you. And first, I just want to say thank you to all of you as first responders on the front line of the health crisis here. We are, excuse me, ultimately grateful for all of your service to get through the health challenge in this front. And on the Small Business Administration side, we're trying to do the same on the economic side of this. So hopefully we can provide you some information that will help you navigate this piece that we're trying to do through the CARES Act and Small Business Administration's disaster loan.
Thank you. Thank you. So, I mean, I don't want to take up too much of anyone's time on a Sunday morning. So let's just get to it. I know there's a lot of good information. You've sent me a PDF with the the verbiage. I'm going to just put it on the screen and then have you kind of go through the document itself. So
okay, thank you so much.
All right.
Okay, so as Dr. Lin and Tarang both mentioned, there's been a lot of information out there, so I'm going to try to make sense of this for you so you don't have to worry about whether you're interpreting it correctly. So we've got a few things that happen in the SBA. The United States Small Business Administration, we've been around as a mission to help small business since 1953. We have a disaster component that we cover as well as part of our programs, and this is where a lot of our focus, well, all of our focus is turned to right now during the coronavirus situation. So what we're looking at on March 27th, the president signed into effect the CARES Act. And as part of the CARES Act, it covers a lot of different provisions from things in unemployment to housing to small business assistance. So our focal point today is the small business part of it and the different things that you could qualify for in terms of the economic and the economic relief options under the program. So I'm going to try to distinguish for you the difference between the Paycheck Protection Program, the SBA Emergency Economic Injury Disaster Loan, which is the EIDL loan, as John mentioned, as well as the small business debt relief programs that we have under the existing 7A environment for the small business loans. So, and how you can talk to folks to get more assistance as you're navigating this and what's in your area. So my understanding is a lot of us are here in Arizona. We have 68 offices nationally, the SBA does. So you can find your local office, www.sba.gov/essentially whatever state. So for our local information, it's sba.gov/az. So with that, Tarang, can you are you going to scroll through the next slide, please?
Okay.
Thank you. So I want to talk to you about the newest program that we rolled out on the 27th. And the reason, we're moving quickly for government, but not quickly enough for, just regular life here. So we're trying to move at the pace that we need to move to keep up with these loans and the problems that are happening in the small business environment. So what you're going to see on the 27th, we rolled out the program, and April 3rd, Friday, we started accepting this type of loan. The Paycheck Protection Program is essentially for payroll forgiveness. We're looking at an 8-week period of time from last year's time, and I'll explain a little bit more of the timing to you, but I want to make sure you understand the intention of this piece with Congress telling us that this loan program exists is really to keep your people employed. So the idea is that you have payroll and overhead expenses forgiven, therefore you can try to keep the folks that you have employed, continuing to employ them. The idea with trying to have a bunch of people leave and then set up the economy again from scratch when all of this is over is the reason why we wanted to put the Paycheck Protection Program in place. So here we're saying you'll get cash flow assistance. The essential part of this is that your loan forgiveness is something that would happen once you work through the bank to show them that you still have the same number of employees as well as the same payroll essentially for the time frame between, well, we're looking at February 15th of last year to April 30th. So the time frame that we're looking at is your payroll period that happened from February 15th, if you were in business last year, through April 30th. When you do that, we look at that 8 weeks and we take 2.5 times that percentage to get a calculation of what the forgiveness amount would be. That forgiveness amount is then something that you would then validate with the lending institution that you're working with at the point where everything is going to close out June 30th. So it's short term. It's intended to be somewhat of a Band-Aid to get you through so that you're not in a position where you have to close your business. So this is the initial idea. Next slide, please.
Okay.
There's a couple things around the terms of this loan. So this is the piece where you keep hearing the number 349 billion. So this number is the amount that we've been authorized through Congress, through the SBA, and it's a direct loan. We do not have overhead servicing fees or cost to this loan to you. SBA will pay the banks to do the processing and the origination around it. And so we've worked that out so that for you, the interest rate is 1% fixed over 2 years. So we're not looking at a longer term loan on this. We're really trying to make it something that's short and we get in, we get out. The payroll cost in this case is capped at 100,000 for the employees that you have that are 100,000. So that's essentially where that's the amount that's forgiven up to that 100,000. Over that amount won't be forgiven. So just kind of keep that in mind for especially for the physicians that are looking at paying your own salaries and things of that sort. So for your staff folks, it might work for some of the other folks, but just kind of keep that number as that cap in mind. The other piece you have to look for is making sure that in the loan amount that you request, 75% has to be going towards that forgiven cost, that payroll cost, and 25% can go towards non-payroll costs. So with a good interest rate like the 1%, and you'll hear various things because when this statute was in, the act was signed, it was actually a 4% loan over 10 years. Then it changed to a 0.5% loan over 2 years, and we finally settled on a 1% loan over 2 years. So we had some challenges initially getting the banks to want to be involved and get them up to speed. So for them, they said they needed to make it worth their time and effort. They wanted to do a little bit higher on the interest rate side. So that's kind of what we landed on. The loan payments will be deferred for 6 months. So once you get that loan dispersed, you don't have to start making those payments for 6 months. So that's another piece of the relief that will help you out too. Next slide, please. Okay. So the main parameter around this loan, some of the main parameters. Small business is usually defined by our regular small business standards, and most of the medical world doesn't really qualify in that space. So we've modified the definition of who's eligible for the purposes of this loan. So in case you're wondering, normally we don't qualify small, but in this case you will as long as you have fewer than 500 employees. So that's something that you want to make sure that, that's the difference between our traditional programs and what's been set up for CARES and for the Paycheck Protection Program is a lot of these sort of nuances around the details, because now a lot more people qualify in this space. Traditionally, we have 30 million small businesses in America. That's kind of the number we key off of, but that doesn't necessarily key off of this 500 employees or less, because that's not the standard definition we're usually using. So one of the things now, sole proprietorships or independent contractors can also apply for this program. And again, we're still talking about the PPP program, the Paycheck Protection Program. And then as far as other businesses, and I know a lot of you guys also have other employments that you might be a small business owner that's not related to your medical practice, but something else you may be doing. That's something that also qualifies in normal industries that we don't count, such as the franchising aspect, as well as food servicing providers. So that's something that you can look at and see if that qualification helps you as well. We look to make sure that the business has been in operation as of February 15, 2020. So that's something that, if you were in business prior to, essentially when everything started changing here, that is the key off date that we go from. Next slide, please. Again, we mentioned the eligibility concerns, so I'm just going to kind of cruise through that piece as well, because we'll talk a little bit more about that shortly here. Next slide, please. So the question that we've gotten, or I've gotten a lot, and we've got about 12 people in the Arizona district office, and we're getting in the upwards of 300 and some calls a day. So if you've called us and we haven't gotten back to you yet, thank you for your patience. We're going through the call list daily. So we also have a disaster assistance call line, which I'll give you the number for as we get through here. So one of the things I want to point out is the maximum loan size for this PPP loan is $10 million. Keeping in mind that it is a 2-year term and a 1% interest rate on it, and some of the other rules we talked about. So we look at the qualification standards around if you were in business, how we calculate the forgiveness amount is really coming off of what you did last year. If you weren't in business at that time, then we look at a different time frame. So January 2020 to January 1, 2020 to February 29th, 2020 is where we're going to key off that 8-week period. If you were in business last year, then we'd look at February 15 to June 30th for the type of qualification payroll window we're looking at. We're looking at average monthly payroll cost, essentially for an 8-week period, and then we multiply that by the 2.5, and that's the max volume, that's the max loan amount you would qualify for on the forgiveness side. So just kind of, and then from there you can add, 75% of that loan is that forgiveness piece related to payroll and overhead. Then you can also do another 25% towards that full value of the loan that you're going for. And I'm going to send, Tarang, if you have access to emails for people that are on your call, I have a lot of key documents that will help you do some of the calculations and figure out, what makes sense for how you can maximize the help in this space. So I will send you all those, and you can reissue those out if that's okay with you.
Yeah, that'd be perfect. Perfect.
Thank you. And so the other piece of this, and we're going to talk a little bit more about the SBA Economic Injury Disaster Loan, the EIDL program, in a minute here. But I want to mention that we don't want sort of double dipping happening, in the sense that you can do payroll and overhead costs up to a certain value on the PPP side, but we don't want you to take out a loan on the SBA disaster loan side and have the same thing happen. These loans are different than our traditional SBA loans because it's 100% guaranteed by the SBA. So we're not having, usually our traditional SBA loan will underwrite 85% of that loan, depending. And that's what makes it more favorable for the banks to lend to folks that can't normally find, the regular lending environment to be helpful. So in this case, it's 100% guaranteed by SBA. That's something that makes it a little different as far as how we service it. And that's some of the things you're hearing on the news as far as how this program is going and what's happening. The back-end systems for us to do approval and servicing between the banks and us, those banks that are already doing SBA lending are set up for that, and they're set up effectively for that. But they're also overrun with the volume on this piece, on this whole program. So because of that, there's some delays, and then we haven't got all of the banks on board yet. I believe right now we've got about 800 or so, and there are going to be more coming on. And those are just the ones that are our normal preferred lenders. The ones that are not preferred lenders are also going to be allowed to play in this space. They just haven't gotten approved and up yet. So some of that sort of storyline you're hearing is coming from just the newness of the program. Next slide, please. So a little bit more on the loan itself. So what do you need to do to apply? So as we put out the application on April 3rd, we literally had guidance out to the banks on midnight of April 3rd. So they're getting up to speed. The rules aren't new. They've been out in the CARES Act as far as what the rules are. It's just a matter of the implementation details, and some of the back-end technology is what's being held up at this point. To date, we've gotten $10 billion in approvals through this program, and there is a cap in terms of, as I mentioned earlier, $349 billion is allocated towards this program. We're at $10 billion currently, not necessarily funded loans, but loans that have been sent into SBA with the process of being approved. So while the numbers aren't in, the money's not in hands yet, but it's definitely in the system, it's in the pipeline. So one of the things you want to take a look at is making sure you get that information in quickly. We don't anticipate getting too far into next week before we're going to see those numbers skyrocket. So that doesn't mean that we're not going to have to go back to Congress to authorize more money, which I'm pretty sure that's going to need to happen. But at this point, that's the time is of the essence in this piece on the front end. Usually we also ask that if you're familiar with some of the other programs from SBA, you'd look for other options of funding before you can apply to this program. In this case, we're not looking for credit elsewhere. You don't have to prove that you've gone to some other bank and they've said no. We've tried to take out some of the extra pieces involved to streamline this process. So this program essentially is complete by June 30. So we understand that it's quick, but that's really, we're trying to get it as fast as we can so you can get the forgiveness as fast as you can. Only one loan can be taken out under this program under your entity and your ownership. So just kind of keep that in mind. If you own multiple things and you need to sort of put them into one space, just kind of understand how you want to structure that, given that you can only apply once. Next slide, please. So as far as the details around what you can use these proceeds for, payroll costs, including benefits, your interest on mortgage obligations incurred prior to February 15th, rent under the lease agreements, and then utilities. So that's what we're calling that sort of payroll plus utilities and overhead piece. So that's something that I want to make sure that you are able to do under your calculation. Next slide, please. And then this is a little bit more detail. And like I said, you'll probably want to take a look at it more when you're working on your application piece itself. But as far as what counts as payroll costs, this is kind of the piece. Now, keeping in mind that independent contractors can apply for this PPP program also, and they're beginning to apply on April 10th. So the application currently is not for sole proprietors and independent contractors, it's for everybody else until April 10, at which point we'll have a secondary application open for them. So if you've got independent contractors on your payroll, you can't count them towards the forgiveness amount because they're going to also apply themselves more likely than not, and they will be able to do that to get their forgiveness piece. Next slide, please. Okay, so we kind of talked about this piece already, so I won't necessarily go through here as much detail. Just keep in mind, if you reduce your staff or payroll, you may owe money to the program because of the fact that if you had 25, we're not concerned about which 25, but we do need staff and payroll numbers to be matched up to the point where you're not lowering what they're getting paid and you're not lowering the number of what you're paying people, meaning as far as how many people you have on your payroll. So please keep that in mind as you look at, rehiring and looking at making sure pieces are safe. So the other thing that I know we've been asked, June 30th is when you have until June 30th to restore your full-time employment if you've had to make any changes between February 15 and April 20. So just keep that in mind as far as you can, because what will happen at the end and process-wise, you'll have to produce payroll documents to show to your lender. And the lender then has to give that to SBA and say, this is the amount that was agreed upon for forgiveness and the terms of the forgiveness have been met. So that's something that happens on the back end to close that out. The banks can also ask for an advance on the forgiveness, so you don't have to wait. You won't necessarily have to wait. That's something we're working through on the back end with the banks, so you'll have it. Next slide, please. Okay, we kind of talked about that one. Okay, so as far as we talked about what you need to do to request the loan forgiveness, the documents that you need to get together, www.sba.gov/paycheck protection lists all the different things that are out there as far as what you need. Lenders may have some of their own additional forms that they would like for their own sort of tracking purposes, and that's where you'll need to reach out and work with your existing financial institution to get some of their details, but our actual fixed forms are already out on our websites. 1% interest rate, which I think is fairly reasonable for a short-term loan like this. And then, of course, all payments are deferred for 6 months. As I mentioned, the interest will continue to accrue over this period. And so a couple of things that are nuanced to this loan, no collateral is required, and we don't have a personal guarantee. Both of those things are usually in play during our regular SBA lending environment. And in this case, we've waived those requirements for this. Next slide, please. Okay, so a couple other things. For those of you that are maybe already involved with our SBA loan programs on the 7A or 504 loan side, few provisions that have been increased for flexibility here is that our SBA is paying 6 months of payments of principal and interest if you have an existing 7A loan or if you have a new 7A loan. So we initially came out before the CARES Act, we were allowing for banks to defer some of these 7A existing loans, and we would allow for deferment for 6 months. Now we're allowing for SBA to pay that 6 months. So work with your existing bank, your lender who you have the loan with for these programs related to forgiveness, because this is basically debt relief, but we're paying the 6 months out of SBA's treasury funds. So there's $17 billion in money allocated for this purpose, also through the existing lender that you have if you're doing new or existing loans on the 7A side. Next slide, please. Okay, so now those are the two big early pieces, the PPP and the 7A loan relief pieces. This is a separate and different, they're all unique, separate, distinct programs. So just keep in mind that when you're looking at which one can I do and, am I able to do all of them, keep that in mind so you understand that you can do all of them. If you have the provisions that you're doing all of them, that's not a problem. Just keep in mind why they're separate and distinct. So in this disaster loan situation, as I mentioned, we have a disaster-related program that's part of SBA's mission and always has been. The only thing that we've done under the Corona side is we've allowed for regular disasters like floods and hurricanes. We've added the coronavirus to that disaster loan qualification. So we made some provisions for COVID that are different than the regular disaster loan to kind of make it a little bit more accessible to everybody. Businesses with fewer than 500 employees, and then our regular small business definitions as well. Sole proprietors, independent contractors, and private nonprofits are qualifiable. So as long as they were in existence as of June 21st, 2020, you can qualify for this loan as well. So next slide, please. And this slide this loan doesn't have a forgiveness around it. This is not the same as the PPP terms, but there's some term differences that may be favorable for what you're looking at. So in this case, we call this the EIDL loan. The maximum EIDL loan is up to $2 million in working capital at a rate of 3.75% for businesses. So here we are looking at a longer term, up to 30 years fixed term, and there's no prepayment penalties. So if you're looking at taking out a loan, let's say you don't have the payroll to support under PPP, but you wanted to do something related to your business that might just help you for sustainment, this is something that you can look at, and you can always pay it off as quickly as you can without really worrying for a long-term debt on your books. So that's something that we are allowing for deferment for 1 year. You wouldn't have to start paying until further down the road, so that can help you out as well. We usually have a guarantee requirement on this loan that's much lower. In this case, up to $200,000 on the EIDL loan can be approved without a personal guarantee. We don't have any collateral requirements if the loan is $25,000 or less, and we can do pretty much a credit-based approval. And we don't require your tax returns for this piece. We've simplified, we used to also ask that you have to show that you can't get credit elsewhere. We're no longer requiring that for this particular EIDL loan. So you can go ahead and apply to this piece fairly simply. And there's a few pieces of confusion that's happened in this space, so I'm gonna clarify that in a minute. Next slide, please. And again, if you're doing the PPP program, just remember that you wanna take we will take that amount that's related to payroll on your EIDL loan and put it into your PPP loan. So we'll refinance that debt into the PPP program to give you sort of the forgiveness aspect. And so we'll move that over, and that merging can happen during the time where between the PPP loan and the EIDL loan. We ask you to disclose the EIDL loan amount or the amount requested upfront, so then the banks can kind of work that piece together. Okay, so another aspect, so this is also a different program. So you see there's a lot of provisions around what you can apply for. The other aspect of this, you've heard something, or you may have heard something about emergency grant or anything related to a $10,000 advance. So the EIDL loan essentially is the one we talked about. What we're calling an EIDL advance is basically where if you apply to our portal, they're looking at giving you up to $10,000 initially to get you started, so get you over that hump. If you've applied to a bigger than $10,000 EIDL loan, then you will still go through the process of getting that larger size EIDL loan up to $2 million. But this initial money is to make sure that you have something to keep you afloat in the short term. So it's not a grant necessarily, it's an advance on the loan, but it does not need to be repaid. So for those that are business owners outside of your medical practice, and you're thinking of other impacts that you're facing, Airbnbs, business rentals, those kind of things, you can apply for the EIDL or the EIDL advance to kind of give you that forgiveness piece there. And that I just want to mention that that's the application process for that. I'm going to talk about next. Next slide, please. I think that's our next slide. Yes. Okay. So now on the portal front, we had disaster declarations in Arizona as of March 19th, and then the CARES Act provisions that changed some of our loan programs happened on March 27th. So if you happen to apply in that window, you might be confused as to where your application is. So initially we put up a portal that was on SBA's site. That portal got overrun and essentially had crashed at some point, about 100,000 in. So when that happened, we then put up a secondary portal for the time frame while we got something more stable up, and that portal has about 200,000 loans in it. So those two aspects, if you applied prior to Sunday, dates are all running together here. If you applied Sunday prior to March 29th, you would have been in the queue already, and we will have those application pieces. You would have received an email from SBA National that basically gives you something that says, if the advance, the economic injury $10,000 advance didn't exist prior to the CARES Act. So if you applied to the disaster loan prior to when that $10,000 advance was available, you have not actually requested that advance yet. And you need to go back into this portal, sba.gov/disaster, and specifically ask for the advance. So once you do that, then that will be in the queue. If you won't lose your place from your original application, it just makes sure that we get your information for the advance portion of it. And so that's something that it's very important for you to understand the timelines. And every state had a different date of disaster declaration, and the whole environment changed once the CARES Act got passed. So some of that, we're moving at a pace that, I was telling Tarang, I have not seen in quite a while. So this is something that, as we are staying fluid with the situation, we're also trying to stay ahead of it. SBA.gov/disaster, you'll see the portal. If you don't remember, it looks like this because it didn't. It's because we did a soft launch for it on the Sunday, the 29th, and now it's been stable, and that's not going to change. We don't anticipate that changing. So there won't be any upload documents at this point. It's just really asking you takes about 10 or 15 minutes to go through at most, where you're filling out the basics of your information, and that's pretty much that. Application directly through SBA. Next slide, please. Okay, so if you're in Arizona, this will be useful to you. If you're not, we have resource partners everywhere, depending on where you are. And please, take advantage of the folks that we trust and give information to directly as well. We talk to these folks, and they are informed with all the information related to how do I navigate this space, how do I apply, where do I go. A couple pieces on the PPP side. Be patient with your lending institution while they get up and running. We understand that there's a lot of resources that are out there, and banks that have been doing SBA lending are in good position. What we've heard is also they're trying to tier their application pool so they're not overrun. So sometimes we're hearing that if you don't have an existing credit card with a bank, they're not willing to process you. They're kind of doing their own tiering staging, so folks are not necessarily getting the assistance in the timely way that they were anticipating. Continue shopping that around. If you've got somebody that, we have a lender list of approved lending banks that are ones that we know and work with. We send that out to all of our Arizona businesses so that they have it, and Tarang, I will send that to you as well. So most of you guys that are working through your medical practices, those banks are pretty responsive because they understand you're valuable clients to them, so they won't necessarily give you the hold button for a while. So just, kind of keep that in mind depending on what you're looking at and what you're looking for. Next slide, please. And just to kind of clarify, the banks are the ones you'll talk to about the PPP program. The SBA side is the one that handles the disaster EIDL loan and the EIDL advance. And that's really the sort of the distinguishment between the two. All of it's SBA money. It's just in the back end that we're kind of making it work out. And we're working with Treasury and SBA to make those pieces happen. Now the click here, you'll be able to do that when you get the presentation itself, but these are some fact sheets that are out there, and there's some newer ones too that I'll be sending you guys. So we just want to keep everybody plugged in as best as we can. Next slide, please. And I know with the speed of information, we're trying to make sure there's not misinformation out there. So we also have a customer service line at the SBA Disaster Call Center, 1-800-659-2955. If you want to call and ask about the status of your application or what's happening with that, the details on that piece are really related to the case manager. So once you apply to the SBA EIDL loan, you'll get a case manager assigned to you when they get to the EIDL loan piece. Now, we had our disaster declaration declared on March 19th. for Arizona. So a lot of folks applied then, but keeping in mind that California and Washington State got their disaster declarations about 4 days or 3 days before everybody else did. So because they applied and worked it through. So as part of doing that, while we may think, we were first in the queue because I know I did it right away, there was also the back end lineup that might have happened prior to Arizona was ever approved. So it is a national program. We are a national agency, and like I said, we've got 68 offices, and I am the deputy director for the Arizona district office here. We have 12 of us, and we are looking to help you in whatever way we can. Next slide, please. I think it just might be in order. That's it. Yeah, okay. All right, thank you so much. And again, I want to really thank you for your time today, as well as hopefully we can answer some of your questions. And more importantly, thank you for keeping us safe. This is something that, unprecedented times, as everybody says. And, we all know that the economic piece of it is secondary and the health side of it is primary. And we could not be more grateful for your service. Thank you.
Thank you very much, Shivani. That was excellent. A lot of great information there. And I'm going to just, ask a couple of questions that were asked to me, and then I'll turn it over to the audience here and see what they want to ask. But let me just go ahead and get one of them. So, I think one question that a lot of people who are already familiar with these programs are, do you have any idea of the processing time? I know because a lot of people are putting their information in, and they want to know when can they expect their money. And I know it's variable, bank to bank, things like that. But any ideas on that?
Yeah, that's a great question. And I wish I could tell you it more specifically what it's going to look like. I think I can give you some estimates and, initially, and I can also give you some context. Initially, that advance economic injury disaster loan, the EIDL advance, that was supposed to fund and be, with people in 36 hours, 48 hours kind of thing. And, just given the back end and the volume, I don't believe that's happened because it's just a matter of getting those pieces. Now, that loan portal for SBA, it's pretty simple as far as when you apply to that advance, you're putting your bank routing information in. So as soon as we clear whatever back end approvals we have to do, that should be the fastest money you'll see. Beyond that, the PPP loan, it's my guess, and don't hold me to this, somewhere between 2 to 3 weeks, because that one has to stand up with the bank. If the bank's already infrastructure to do it, like I mentioned earlier, we've got 10 billion in approvals on that, but as far as funding it, still requires some of the back end to be built out, even if they've gotten it through the front end. So I think that one, the earliest we'll start seeing is maybe 2 weeks, and then after that it'll start. Once it starts flowing, it will flow, accurately, especially because the volume is still going to be increasing too as more applications come in.
Okay. And then one other question is if you've applied for both the PPP and EIDL grants, is the forgiveness of the PPP loan reduced by the 10,000 of the EIDL grant?
Well, yes and no. Okay, so the 10,000 that is the EIDL advance, that part is not counted. So we would take that amount out of the PPP loan. Okay. So it's forgiven, but it's forgiven as part of the advance. So it's kind of one of those things. In the formula that I'm going to send you, you'll kind of see where that 10,000 goes into play. So as far as, and same thing, like if you're getting a larger, than the disaster loan side, let's say I'm applying for $100,000 under the disaster loan, under EIDL loan, and then I get a 10,000 advance, I would essentially just be paying back a $90,000 disaster loan. Okay. So that's basically the idea is that you're taking that 10,000 as an advance, but you don't have to pay that back. There's no expectation for payback, but it'll reduce the amount of your loan request by 10.
Okay. John, do you have any questions?
Sorry, I had to unmute my microphone. Oh, yeah. So just for clarification, Shivani, there are basically two programs. One is PPP, well, two broad categories. One is PPP and the other one is EIDL or EIDL. And PPP is 10 million max, 1% interest, and EIDL is 2 million max with 3.65% over 30 years. Within
3.75%.
3.75, thank you. And within EIDL, there is something called the EIDL Advance, where you can get $10,000 advance, but that when you do take that amount, the advance, the total amount that you can get out of EIDL is reduced by that amount.
Correct.
Okay.
That's correct.
And there's been a lot of confusion as where to apply and things like that. For PPP, it's through a fintech or a bank, and then for EIDL is through SBA. However, both programs are administered or overseen by SBA. Is that correct?
That is correct.
Okay.
Yes.
Yeah, I just want to give everybody the broad.
That's an excellent summary, and I appreciate that. Yes, you're exactly right. That's the two tracks, the same money in the back end, just a matter of who's administering it. I mean, we know that on the EIDL side, I believe the loan value, we've got about 50 billion, I believe, that we're going to be administering through the EIDL loan. And that one, the end period for the EIDL loan is December of 2020. So end of this year will be when you can no longer apply to EIDL loans related to the disaster we're in right now. So there's a time block on both of them.
But PPP is through June.
Through June 30th.
Okay, good. So there's some urgency to apply for PPP. Now, the other big
Correct.
difference is that the amount that you get from Paycheck Protection Program is a grant versus EIDL is a loan that has to be paid back unless you apply for the $10,000 advance.
Right, and I want to clarify, we in our federal space, we get nervous with the word grant because it's loan forgiveness, because you still have, there's still amounts of that loan that you're going to be paying if it's not related to that payroll and overhead cost, right? So in theory, if you do it with a one-to-one calculation and everything in February of last year is what you're kind of trying to get out this year and nothing else has changed, then essentially it's the forgiveness, it's a wash. You won't be having to pay anything on that loan. But most likely there's some things that you might be needing to take out in addition to just what you're paying on payroll and overhead, and that is that 1% rate. So we don't, none of these we're really calling grants because they're not really administered the same way as a grant, but they're on the forgiveness side of the house. That's kind of how we looked at it.
Got it. That totally makes sense. So you're saying that for the PPP, if you take out a loan amount that is greater or an amount that is greater than what you would qualify to on payroll and eligible expenses, then that balance between how much you took out and how much you needed is actually a loan that you have to repay back at 1%.
Correct.
Very
that is
important
right.
to know.
And that's not a bad rate to kind of do it for if you think that there's some short-term expenses that you do want to sort of front, and then you'd be like, okay, well, it's not, as long as it's not more than 25% of that sort of full. This program was really designed around paycheck protection. We really wanted people to keep the staff they have so that they didn't have to go to the unemployment line and that you didn't have to start over with sort of rebuilding your qualified, skilled staff to start from scratch when everybody has to be let go.
And one final question, what have you heard as far as fintech and the banks? How prepared are they to take the PPA applications or PPP applications?
So for the PPP, we've allowed for the banks themselves, they're prepared. I mean, we've got the big ones, the Wells, the Chase, the Bank of Americas, they're ready. It was just really a matter of them. We're building off of an existing program through the SBA Express portals that we have. So on the back end, there's some technology pieces of it. They're ready. It's just a matter of the technology kind of catching up to how they want the processing to go. And so they're overrun as well. They've got, if you've tried to reach out to a banker related to this, they don't put the links on the website to, hey, apply to PPP here. They're being real selective about how they reach you and, how you reach them, and then how they'll say, okay, you can apply now, and then they'll send you what they need to send.
And so for most businesses that have an existing banking relationship, you would apply through that bank?
That would be the right way. So I will send out a list of our approved lenders. And so there is on our SBA website, and I can't say that it's entirely accurate because every lending institution that has a relationship with SBA, we have their information on record and stuff, but we've got a lot of people that have sort of fallen off that grid too. So some of those banks that are on there may or may not be doing the, SBA lending. And so they might falsely be on that list. So we're working on cleaning that up right now. But our most accurate for Arizona is going to come from the PDF that I can send you.
And some people have asked, what if I am a 1099 employee or a 1099 worker? Will I be eligible for either PPP or EIDL?
Yes. Okay, that's a great question. So yeah, if you're a 1099 worker, independent contractor, you can apply through you will qualify for SBA's EIDL loan, SBA's EIDL advance, and for PPP. But just remembering that if your employer, count you as part of their PPP loan because you will qualify for your own starting April 10th.
Got it. Thank you.
And then on the EIDL side, they don't have to wait till April 10th. They can apply now. It's just on the PPP side for independent contractors. The paperwork and the system nuances related to independent contractor and the payroll proof that we're requiring is slightly different.
I'm really looking forward to someone creating a flow chart of you start here and then you go down the flow chart.
Right.
Point taken. I think our communications departments in Washington have been working overtime since this thing came out.
Here's a couple of other questions from the people in the Zoom. So we started our PLLC for our medical practice in November of 2019, signed a lease in February 2020 with the intent of opening in July 2020. We hired a nurse to start with us then, but are we eligible for any of these loans since we're not actually actively seeing patients currently?
Now, the question that we started with was, were you in business as of February 15, 2020? Was that?
So the PLLC was in place in November 2019.
Okay, so they would qualify for PPP. Okay. They would also qualify for all of these things around the EIDL loan. Okay. And so they would be qualified. Now, just taking a look though at there's one piece that I said, if you were a business prior to February, if you were not in business prior to February 15th of 2019, which would be the scenario they're in, okay, then we would look at the max loan amount to be 2.5 times the average monthly payroll of the cost between January 1, 2020 and February 29th, 2020.
Gotcha. Okay. So if the nurse was on their payroll at that time, they would have to take the average.
Correct. And they would do that, it's like the 8-week period in that window of time, given the fact that they didn't have a payroll during the time we're looking at for all of businesses.
Okay. Another question is, what time frame from once you get the PPP funds do you have to use them?
So the use of them, so it's kind of an interesting thing because you're getting them right away and you're basically paying the folks for the time frame that they're already working through. So the use, everything needs to be closed out by June 30th. So you would have to be back to your whole payroll. Essentially, if you let changes or things people go, April 26th is the day we're saying that you've got to be back in commission with that same sort of number count. Okay. Because then you'll be giving the bank the information to say, I remained whole during this time frame, just like you asked us to from the time frame before. So you're not really looking at more current information, except you're validating against the current information payroll. We've already determined your payroll value based on the last year's amount.
Okay, so kind of going along with that, if you've already furloughed employees, and then can you choose the date of disbursement to start your 8-week or?
Usually the date of disbursement kind of just happens as it's working through the process. So as soon as that loan is approved, that's the date that starts that sort of 8-week clock.
Okay. So when you get it is when it goes, basically.
When it goes, that's correct.
Okay.
And keeping in mind, it's like, I know we've gotten that question too. It's like, it's really about keeping those people from having to go and apply it to unemployment and other places to keep them whole. Mm-hmm. So we're trying to stop the hemorrhaging at the sort of first line before it gets to the point where, people are now all at the unemployment line because they were furloughed for this period.
Right. One other question, I think a lot of people are having this because can you apply for PPP with a bank that you don't have an existing relationship with?
You can apply it with a bank that you don't have a relationship with. Now, what I would recommend is that if you've got a community bank, and this happened in 2008 too when the recession happened. If you've got a smaller lending institution that does SBA lending, like a credit union or somebody that's a community bank, those guys are always a little bit more agile than the large environments. So if you can't get to work with your existing bank relationship, then I would reach out to some of those qualified lenders too. We just got word recently, and we don't endorse, but we just got word that the WAFD, which is Washington Federal, they're based out of Seattle, but they have 22 locations in Arizona, and they specifically said they are taking non-existing clients. So we haven't had too many reach out to us and tell us that, so they were ones that did, so I'm passing it along.
Okay, good. All right. Let's see here. I think you may have, but if you applied for EIDL, can you still apply for PPP? Would it just be docked by the 10,000?
It would be, yes, if you applied for EIDL already, yes, you can still apply for PPP, two separate and distinct programs.
Right.
So there's no issue in terms of what you're doing with that, except for the overlap. So initially in your EIDL loan, you probably assumed that you were going to be taking payroll costs as part of that working capital request you were looking for. So you just want to back that number into the PPP loan, and we'll basically move it over from the disaster loan at 3.75 over 30 years over to PPP so it can be forgiven. So that's kind of the idea, is you're going to get the benefit of moving that over, and then the 10,000 would come out of that. So that's the formula would work that way. So you'd want to do your PPP calculation according to the fact that we don't want your payroll costs on the EIDL side. We want the ones that we can cover under the PPP side. We will.
Okay. I just want to make a note to those who are listening right now. If you're on the Zoom call, and some of you have been messaging me or on the group chat the questions, and that's great. I can read those. If you haven't yet, go ahead and type your question in. Otherwise, if we just let everyone talk, it'll be a little bit too overwhelming. So if you have any additional questions, go ahead and just type them in on the chat function, and then I'll relay those questions. So some of you have already been doing that. I have another question here. Let me see, from Facebook. Let me just get to that one here. Here we go. Let's see. Oh, so here we go. This is a really good question, because anytime we talk about these massive government programs, how much review and due diligence are actually being done on these applications? Because we want to get the money out as fast as possible, and people need it. I don't know if that's
yeah, well, so that's a very good question. And every time you have something like this, there's always associated fraud to it. So, we try to put the controls in play to say, you're certifying to this and you're certifying to that. The banks themselves have some of the responsibility of confirming what your payroll records are, or what you're providing them regarding your payroll records. We've tried to distribute some of the responsibility on this because of the fact that, if you put it all in one party, it usually will implode. So the banks sort of know what they're doing in our SBA lending environment, and they know what to look for to ensure that we have our own SBA inspector general that, comes on with all of our calls nowadays and says, there's a lot of scams and fraud. And keep in mind, you don't need to use anybody to really do this part for you, because we aren't designing this to, have a fee involved or fee related. You can do all of the applications. They're essentially fairly straightforward, especially the EIDL one right now, because any of the details around the EIDL loan application will come once your case manager is assigned. So if you're trying to see somebody, and anytime this happens, we've got scammers and things out there, for $10,000, I'll do your loan package. This is not a traditional loan package. So everything that you already have, and really just kind of be cautious of that, because we have people that, and the banks are making some money on these loans. They're going to get a certain percentage interest or origination fee for what they're doing, but that's not coming from you guys. It's going to come from us. And they know that, if it's over 2 million, if it's under 350, they get a certain, fee out of it. So they're working that piece of it. And then as far as, we're going to have controls in place that are not too different than our regular controls, but the volume is just a different size. So we'll be looking out for that as well.
Okay. Another question we just got. So it says that for PPP, you can use the money for payroll, rent, utilities, et cetera. If there's leftover money from the revenue that you're getting in your practice, I'm assuming, not the loan itself, are you then allowed to distribute that to the partners, not from the PPP loan, but what's left in your own revenue? Because now you're using the PPP amount, I guess, to pay the other costs.
If you're using it for more than 25% of the other costs, then it violates some of our terms. So just kind of keep in mind that 75% of the loan should be going towards payroll and overhead, and then you have about 25% wiggle room to do other things. And on that front, just keep good records in terms of when you get these loans. Keep good records of where that money is going and how you're accounting for it, because that is where going back to that sort of fraud question, people will ask at some point, at any given point, down the road, someone's going to say, we need to see that information, as they start seeing more and more things about people that maybe didn't follow the terms. And, those are loan agreement terms, which is why I'm saying it's not a grant. Those are the things you're signing up for as part of, I've committed to do this with the federal government's money, and this is my plan to execute on that promise. So that's kind of the certification that gets signed before the loan gets approved.
Okay. Good, good. This is really, really good information. I appreciate you taking the time. I know a lot of people have additional questions. So for those of you who are listening, if you have additional questions, go ahead and shoot me a message on Facebook or put it on our comments section on the video, and I'll forward some of those to Shivani, and we can do that. I don't want to keep everyone too much on their Sunday mornings, and I know we've all got none of us have any places to be because we're all quarantined at home for the most part. So anyway, but thank you, Shivani. Thank you for doing all this. One last question. So let me just go ahead and get that here. If we still have money coming in from current work or previous month's payment, will this determine whether or not the loan is forgiven?
No, because it's not going to really have bearing on the forgiveness piece, because the timeframes we're looking at are really not related to right now, right? So like the time frame for the forgiveness amount is determined from last year's income and average revenue, sorry, not income, but the average payroll. And then this year's money for forgiveness is really just about when we give it to you, and you'll confirm your payroll time frame for somewhere between that February and June time frame.
Okay, and then last one here. If the applications don't get processed by April 26th because there's such a ends up being a big backlog, will that affect the 8-week time period then?
They're looking at that. So they're looking at potential time frame changes if that's going to be something that has to happen. Right now, though, the anticipation is that the program closes out June 30th. So, as long as the loan is approved by that time frame, again, since we're not looking at the current block, somewhere between February 2020 and June, 2020, June 30, 2020, that's essentially the time block that we're looking at for sort of when the forgiveness program is finished. So all of the details around that timing are pretty much keyed off the 8 weeks prior, not the 8 weeks current.
Okay, good. Well, thank you again. Appreciate it. Thank you all for joining us. A recording of this will be on, Dr. Lin is putting it on his Facebook page. I'm going to do it also in the Dr. Money Matters group. And then if you have any further questions, we'll pass them along to Shivani. I'll also put the documents that she sends me to us on the group. So just look for those. Thank you very much, Shivani. Appreciate it.
Thank you guys so much. Please stay safe. All right, thanks.
All
right, bye-bye.
Bye.